Okay, Money Duck here. So tonight I'm going to go over the ORB strategy or opening break, range break strategy. A lot of people use this strategy. I've been asked to go over it. There's some people in our Discord that actually actively use this. I think some people used it, left, come back. I don't know, but it doesn't pull a lot of weight in there. We had a new member that had asked me about it, sent me private messages. So was really struggling with it. I've looked at it in the past. It will work, but you have to make some modifications. So basically, rule of thumb and how this is traded is you're going to find the either the first, some people even go down and find the first 5 minutes. I don't like that. I like to let the market settle in a bit if you're going to use this strategy. Any breakout strategy, you're letting the market settle into consolidation or some sort of sideways movement or get the opening jitters out of the market. So, and that's what this is. It's basically trading the U.S. Stock market open. And some people are using 9:30 to 9:45. 9:30 U.S. stock market opens, 9:30 a.m. Eastern. So some people are using that 9:30 to 9:45 window. They're basically marking the high and low of the first 15-minute candle. Other people are using the half an hour, first 30 minutes. Looking at the 9:30 to 10 time frame, marking the high and low. There are some people that even watch for the hour and are that 9:30 to 10:30. They want the market to open up, get everything out of its system, and then look for a breakout and continuation. So you'll see what I've put on the chart is basically an ORB indicator that has targets, okay, along with it, and I'm marking and using the halfway point. So as I looked back over the data, and this person specifically trading NQ, I don't recommend that as far as a beginner. However, I looked at it across ES, Dow, and the Russell, and Nasdaq, it plays out the best, okay? A lot of choppy on the others. So I would recommend using it on the Nasdaq. However, you're going to have a decent size account in order to trade this. Now, I'm a firm believer in getting profit when profit's given to you. So we always close out part of our trade to capture profits and lock in something for the day. As you're going to see, a lot of people, what they'll do is they'll take a trade on that breakout and they'll shoot for like a 1-to-1. So they might put their stop halfway between the high and the low. So again, I'm going till 10 o'clock. So it's 9:30 to 10 a.m. Eastern for me. And then I'm looking for a break of the high and the low. So we're marking the high and the low between 9:30 a.m. and 10 Eastern. And then we're looking for a break of that. I'm using the halfway point for a stop loss. You'll see why. As you look back through the charting, through history, you'll see that a lot of times the Nasdaq will barely go to 1-to-1, just barely go to 1-to-1. So what I'm doing is closing out partials. We're closing out a couple contracts, moving our stop to break even, and then letting our runners ride. And I'm going to go over the rules here in a minute. So let me get right into the slideshow. I put together a quick slideshow. Well, it wasn't very quick to put it together, but yesterday and today. So let me just go through the slideshow, and it should explain everything a little better. So the objective, of course, for this lesson is to show you how to use the ORB strategy. This is with my little twist on it, okay? You can go out there on the internet, and you can find all kind of strategies or rules to this. You're going to change them, or you may change them. So as I looked and scoured back through the charts, and it's pretty easy to see once you put the indicator on the chart, and this isn't my indicator, it's just one I found, but once you put any of the ORB indicators on your chart, it's pretty easy to slide back in the past and look just at a glance. You can see how it breaks out. You can see if Nasdaq breaks out. You can see if it pulls back to hit that halfway point, or does it pull all the way back to hit the other side. You can see if it goes and hits take profit 1. Does it go further? It's pretty quick to see. So it's not something you have to spend a lot of time with. looking back. Now, I've done several things with this. You'll see some charts as well as results from me going through in replay mode and testing back from March 27th to Friday, which was May 2nd. So I'm going to show you how to set it up for the session, how to get ready, how to enter the trade, how to manage your trades, okay, and when to exit the trade. Here are the rules, okay? These are the rules that I've made. Now, I've got a little twist on this. I'm going to tell you right now, there's some people that won't like this. There's some people that will. I'm going to tell you that it works, okay? As I looked back and saw, I divided the session into two halves. The morning session, 8 a.m. to noon, okay? Because again, I'm not looking for a trade till 10 a.m. I want 9:30 to 10 a.m. Eastern to go by the wayside, and then we're going to look for an entry, okay, when price basically closes above the higher low. So basically our trade window is 10 a.m. to 12 p.m., so a 2-hour window to trade. We will take all trades, all signals that are given, okay? That's it. You're going to take every trade that's given, okay? In the afternoon, this is what I'm calling redemption period, okay? Redemption time or redemption period. You are only going to trade if you have no winning trades in the morning. So if you're trading from 8 a.m. to noon and you have a loser or two, because typically you're going to get one or two entries. Okay, you'll get one entry if it goes and signals say to buy, and then if it pulls back and turns, you're going to get an entry to sell. Okay, or it might pull back and go back up again and give you another buy. So you're going to take every entry, all trades, between 10 a.m. and noon. Again, it's 1 to 2. I haven't seen 3 in that 2-hour period. Okay, so 1 to 2 entries. And then if they are both losers or you haven't had any winning trades, then you're going to trade the afternoon session. That 12 p.m. to 4 p.m., that 4-hour window. That's what I'm calling the redemption period. So again, you're only going to trade if you have no winning trades. You are also only going to take one trade. You have one shot at this. A lot of times, if in the morning, what I notice between 10 a.m. and 12 p.m., it's going to move, and it might break out one way or another and do what? Trend for the day. If it doesn't break out and trend for the day, that 10 a.m. to noon, if it goes and puts you in long, turns around and comes back and puts you in short, turns around, comes back and stops you out again, 2 losses, what is that considered? It's considered consolidation, sideways movement. Well, what happens after consolidation? Normally we have a break, correct? That's what the afternoon's for. So again, only trade the afternoon if you have no winning trades. That's how I back-tested the system. Now, you could have a winning trade in the morning and take another trade in the afternoon and have another winning trade, but you don't have to. So the way I tested this was we're going to trade the morning session from 10 a.m. to noon. That's going to be our living. That's going to be our livelihood. If we don't take any winning trades, don't have any winning trades, we will trade in the afternoon, 12 to 4. Okay. Now, for those of you that trade in the morning and have a winning trade, you can go on and trade in the afternoon. I'm not saying you can't. It's just the way I back tested this was, let's trade in the morning. Let's make our livelihood 10 a.m. to noon. That's it. We're going to commit 2 hours to trading. However, if we have no winning trades, we will trade in the afternoon. Now, some of you won't do that, and that's okay. You'll just have the 2 losses for the day. But you're going to see how runners will cover the losses, okay? You're only going to place one trade in that 12 to 4. You're not going to trade back and forth. You got one shot. You're going to trade the first signal. That's it. That should help you cover some or all of your losses for the day, okay, that breakout. Entry rules are pretty simple. you're going to buy when a candle closes above that range, okay, that opening range high. In this case, it would be above, it would be after 10 a.m. But if the candle closes above that high, we buy. If the candle closes below the low, we sell, okay? Target options. You've got several options as usual. Pivot points. You've got our position tool targets if you want. You'll see that the tool that I'm using has target levels on it, and it's based off of the half point, and you can change that. So where I'm putting my stop is halfway. So we want the first point to be obviously 1-to-1 and then 2-to-1 and go on. So that's where these take profit levels are projected. Okay. So those are your take profit levels. Managing the trade. We are going to close partial at profit target 1. No ifs, ands, or buts, because you will see through the charting how time and time again, it signals, it breaks out, only goes to PT1, profit target 1. That's it. And it turns. And it might go sideways the rest of the day. Or it turns and goes all the way back. Or it turns and goes back, stops you out, and turns around and comes back up. So we are going to close partial. That's it. That little spin right there changes the outcome of this strategy. If you look at the charting, you'll see a lot of times where you will, people will want a 2-to-1, okay? They want 2 times the risk level. That's great if the market gives it to you. What happens is they'll take this opening range breakout, it'll signal a buy, they'll put their stop loss halfway, they'll want 2-to-1. It only goes to 1-to-1. Sometimes it goes up and barely touches 1-to-1. Turns around and stops you out. So that's where a lot of people get frustrated. So when I look at a strategy, this isn't the first time I've done this, where someone's given me a strategy, I've looked at it going, fresh eyes, not trading it. It's easy for me to go back and look, put a tool on the chart that I can just scan back, and I just look at the moves. I look at what happened after 10. I look at what happened before noon, and I look at what happens between noon and 4. Those are my time frames, okay? The morning, whenever I want to start trading, typically for me, it's 8 to 8:30 in the morning, okay, till 11 to take new trades. And then afternoon, I just manage my trade. In this case, we're only going to look to trade 10 a.m. to noon, 2 hours. We will only look to trade if we have no winning trades on the day. Okay, so we are closing partial. When we close partial, we're going to be aggressive and move our stop to break even. As far as manage our runners, we're going to move the stop. We're going to trail it back 1 level, and we're going to close the trade at 4 p.m. A lot of people are trading prop firms. Okay, there's no reason not to. It's an easy way to get in. You can get in with $30 to $50 and get into an account that's $50,000 where your drawdown's $2,500. I don't recommend trading Nasdaq if you have a few $100s. When I started trading, my recommendation, what I started with $20,000. Okay? What I recommend back then, when I recommended to anyone that would ask me, how much do I need to start trading with? 10,000 was my minimum. That's what I recommended. If you don't have 10,000, you don't start trading. Okay? Because of the margins. So I've seen people, try and use all kinds of amounts. I want to open a $50 account. You're going to blow it in Nasdaq. You're not even going to be able to place a trade. Okay? So it's best for those that don't have that kind of funds. You don't have $5,000 to $10,000, and you could do it now with, a few thousand. But you don't have $5,000 or $10,000 to put up. Use a prop firm, okay? Because you can trade the size, and we don't need much, okay, with this. You'll see how many contracts we're using. As far as end of day, that's just stuff that we typically like to use to journal our trades and post in the premium section. Obviously a reminder to spend time with family or do something that you love, okay? Here again are the trade session rules. Again, we are only going to trade from 10 a.m. to 12 p.m. Eastern. We're going to take all entries. afternoon session, that redemption period, I'm calling it 12 p.m. to 4 p.m., we're only trading if you have no winning trades and you're only taking one trade. The only exception to that is that, again, you could trade the morning, have winning trade or two. If you choose to trade the afternoon, that is up to you, okay? You're having a great day. You've placed one or two trades. They've both been winners, and you decide you want to trade in the afternoon, place another trade. It's a winner. Great. You've got 3 for the day, okay? You may have a loss. If it trends in that 10 to 2, it may not. It may reverse in the afternoon, okay? So you got to be careful with that. But by trading in the afternoon, that redemption period, again, only if you have no winning trades, that will help you recoup some or all of your losses, okay, from what I've pulled. Well, let's the setup session. How do we set up for the strategy? Strategy is very simple. That's what I think a lot of people like with this strategy, is it's very easy to set up. It's very easy to use. It doesn't take a lot of thought process. It's very easy to trade. Someone asked me, well, you're already trading a strategy. Why would you even look at this? It's like, well, not everybody's trading my strategy. There's other people, there's traders all over the world, and everybody's using different strategies. Okay, there's not one strategy that fits everybody. Everybody has different risk tolerances. Everybody has different times they can trade. With this right here, we're going to look at the first 15 or 30 minutes after the stock market opens. Now, I looked at all. Again, I put timelines, and you'll see them on some of my charts. I put timelines in here. I put a vertical timeline at 9:45, okay? And I had this set up 9:30 a.m. Eastern to 10 a.m. Eastern. I had a vertical line at 9:45 in there, which is the halfway point. I was looking when I scoured back at these specifically, the high, the low. Did it break out between 9:45 and 10? What I saw most of the time was that between the 9:45 and 9:30 and 9:45, there were times where it just peaked below this low. Like in this case right here, this didn't happen here, but where the candle just closed. Because right here, if we're looking at this green candle to this red one, that right there is between 9:45 and 10. Some people look at the first 15 minutes. That's this downward move. Okay? Between 9:45 and 10, it some more than not had tendencies to push down and close below this 9:45 low, which would do what? Signal you to enter a sell. It would turn right around and go back and be a loss. So that's why I chose, as I looked back, I chose to use 9:30 to 10. Okay. Basically what we're going to do is we're going to mark the high. Okay. Mark the high. And that starts, right now in this chart, it starts early. But basically you're coming to the chart before 10. Okay. Because sometimes it breaks out right at around 10, 10:03, 10:05, depending on if you're using a 3-minute or 5-minute. You're going to mark the high. Okay, you're going to mark the low. And then we're going to put our stop loss in between. You can see a little dashed line over here. That's where your stop loss is going to go. We're going to use a half stop, okay, in this case. Entry rules are simple. We're going to buy when the price closes above the high, and we're going to sell when the price closes below the low. That's it. That's it. We're going to use the half stop for our loss. That's all the rules are. Now, again, I will touch on time frames. I'm using a 3-minute time frame for this. I like the 3-minute over the 5. Some people use the 5. Sometimes the trading on the 3, a close of a 3-minute candle can put you in earlier than a 5-minute candle. Okay, so if it puts you in earlier, what does that mean? Typically, it means you're going to profit sooner or you're going to profit more. I've looked also at a 1-minute. It's very risky, I think, to wait for just a 1 minute candle to close on the other side. Okay. Stop options. Several stop options for this. I used to straddle the Forex market a long time ago. Along with the straddle of a session, we were looking at session breaks. So like the Asian session or Tokyo session, we would look at that to break out during the London session. So before the London session, we would mark a high and a low of the Asian session. Okay, same thing we're doing here. We're just marking the high and the low of the first half hour of the U.S. stock market. No different. But we would mark the high and the low and wait for a breakout. You could use several levels. Well, you could go with a quarter stop, quarter way down to the other side of the box, a half stop, 3/4 stop, or in this case, I put it beyond the opposite side, okay? Just in case it comes down to test this. What I noticed was a lot of times if it hits the halfway point, then of course it's typically reversing, not always, okay? This right here, quarter stop, is great for those people that think, well, I don't want to risk as much. I'm going to use a quarter stop. I will tell you this. It would be better for you to go with a half stop and lower your contract size. So if you're doing 4 contracts here at a quarter stop, okay, I would go 2 contracts with a half stop. And the reason why, a lot of times it pulls back to that quarter stop. It's almost triggered here. This was your buy signal. There's your green arrow, buy signal. You're buying, it pulls back, okay? Now, you can also do that. You can buy on a signal, green arrow, you're going to buy, or you can wait for it to pull back. Dip back, buy on the dip, okay? It's up to you. I ran this as if somebody is very, very new to trading. They don't know anything about pullbacks and watching a dip and pulling fibs for that dip pullback and pulling a fib from, this low to this high because you have a swing here, pullback, swing here. You'd pull fibs, look for that to pull back to bounce around the 50% level. Put your pending order there and you're in. None of that. I ran this as if somebody's brand spanking new. They don't know anything about market moves. They want to trade. Can this be simple enough for them? I'll tell you this. We also have to think about people that work. Not everybody can sit here all day and trade like some of us can. Okay? This is my job. This is what I do. Trade for a living. I can sit here all day and trade. Not everybody can. Some people, a lot of people work. Can this work for somebody that works? So the one thing I do like about this over a strategy that I'm using or other people are using, some of them, you're getting signals. You have to run to the computer or whatnot. What I like about this strategy is somebody can go to the bathroom. They can literally go to the bathroom at what time? 10 o'clock. 10 o'clock a.m. they can go to the bathroom. They can actually go to the bathroom at work every day at 10 o'clock. Bathroom break, right? And you could actually place a pending order long and short outside of this. And one of them's going to be, set an alert, and one's going to be triggered. Or you set alert lines. And then, of course, if you get alert line triggered, then you'd have to go take another bathroom break or sneak a trade in. But those are your different stop options, okay? Placing a trade. Again, you got a buy signal. Green arrow on the chart. You can set up alerts on these things. So we set an alert when price closes above a high, you're in buy. We're going to use the halfway point for our stop, okay? Halfway between the high and low. As far as moving our stop, pretty simple. When price hits the first target, the first line right here, we're going to close out partial and we're going to move our stop to break even. That's it. Give me some profit. Lock me something in just in case you only go to profit target 1. Now, I will tell you this. If you look at this chart, I'm not going to measure it out or anything. Here's your signal to buy. It's a signal to buy when the candle closes above the high. okay, or below the low. So we have a signal to buy because it's closed above the high. That's your entry. Now, what is this calculated? This line where our stop is the halfway point. It is halfway between the high and the low. It is halfway. You are entering, this is important, you're entering above the high. Okay, so take profit 1 here, and hopefully you can see that in the slide. It's right here where my cursor is. Take profit 1 right there is actually closer to you. Okay, so that take profit 1 is based off of the midpoint being here, the high being here. It's the equal distance. So you're going to get less than 1-to-1 by doing that. Okay, because you're waiting on a candle to close. Okay, off that, by the way, your once you close partial, and we can use a pending order on that, right? You can enter here with your contracts, and at the first take profit level, you can put a sell limit order to close out part of your trade. That's what we're going to do. And we would move our stop to break even. So we would take our stop once we hit profit target 1. I wish that showed up a little better. I think the cells show up better, but you can see a line right there, kind of barely. But we'd move our stop to break even. Now we can relax. We're protected, okay, against any loss. So again, moving the stop, it's kind of hard to see the lines, I think. I apologize for that. I can see them on my screen. You might be able to see them a little better here. I don't know, but where my cursor is line 1. Line 2 right here is where that stop is moved to. So again, it went up here to hit profit target 1. We moved our stop right here. Okay. Oh, didn't want to do that. Then it moved up to hit profit target 2, which is right here where the arrow is. And then we'd move our stop up to profit target 1. You're going to trail your stop 1 back. And then, of course, it comes up here and hits profit target 3, and you move your stop right here, which is on profit target 2. Okay? And that's how you're going to trail. You're going to get stopped out before the end of the day, or you're going to close your trade at 4. But basically, trail 1 level back. It's the opposite for the sell signals. There you can see the sell line's a little bit better. The buy lines up there, the profit targets, if you buy, don't show as well. It's because of that black screen, and it's like a darker green, so it kind of blends in. So I will change those for the live. I might even change them to like a white dash line or something. Same thing. You're going to get into the trade here when it closes on the underside, breaks the low, closes. We wait for close, right? Candle closes there. You're going to use a half stop. Again, when it hits profit target 1 right here, you're going to move your stop to break even. You're going to close partial, move your stop to break even. Comes down, it's profit target 2. We're not closing anything. We got 1 runner on, but we're going to move our stop down. We need to lock in the profit. Move your stop down here to profit target 1, okay, because 2 was hit. Now you can either wait for it to hit, just hits it, move your stop, or close. Those are the two variations to moving your stop. Some people will be like, okay, it hit right here. It just tapped profit target 2. I'm moving my stop. Okay. Want to get it in there. Make sure you might get stopped out sometimes before the other guy that waits for a candle to close like this, waits for a candle to close on the other side of that profit target, then moves their stop down to that level. So again, it just depends on you. Each trader is going to be different. And then, of course, it moves down to profit target 3. You're going to trail your stop. Again, you're going to get stopped out or wait till 4 p.m. to close. Because prop firms, you need to close your trades before 5 p.m. Standard Eastern. And I recommend closing them yourselves. Never let the brokers software close your trades. Do it yourself. Okay? You're trading for a living, or at least you want to trade for a living. And you need to be accountable. I need to see what this does if I shut that off. That makes me look blue. So here's what the signals look like on the charts. Okay. Basically, we have a green arrow for a buy signal. That's it. It's going to show up on the bottom, right? And then we have a red arrow for a sell signal. Really simple, okay? That's it. This strategy is simple. You want to keep it simple. That's what I looked at. Let's not overcomplicate it. Let's get someone that's new and to the game, and let's try and make something that's very simple to use. So that's what we're going with on this one. All right, so here's a flood of examples, okay? So I went through the charting and went back to, what was it? What did I say? March 27th, I think it was, 27th. So we had April and then the first part of May. So we've had a little bit over a month data in here. I went back and manually marked these up, as you can see, just to show how things went. Now, here's a couple things for you to think of as I show you these charts, okay? One, is profit target 1 hit, okay? Something to be aware of. Well, first, do we get a buy or sell signal before noon? This vertical line right here is noon. The gray box right here is 9:30 a.m. to 10 a.m. Eastern, okay? So that's that first half hour of the U.S. stock market. So first of all, did you get a buy or sell in the first 2 hours of the market? Because again, this vertical line is noon, okay? Did you get a buy or sell in the first 2 hours of the market? During that stock market after the stock market opened? Yes, we have a buy signal. Did the buy signal did the trade hit profit target 1? Yes, it hit profit target 1. Did it hit profit target 2? Nope. Did it come back and hit your stop where it originally would have been? Yep, right here. Okay, so let's look at that first. If you get in the trade and you don't close partial up here at profit target 1, so you get in and you're waiting for 2 to 1. You're waiting for it to hit 2 to 1. It has to hit profit target 2 for you to get 2 to 1, right? And you're waiting. And it comes back and stops you out. Losing day. You're probably not going to get back in. Okay? Because around here it's like what? 1 in the afternoon? Okay? So you're going to call that a losing day. You are going to call it a losing day. But I'm not. Because we get in here, stop down here, it hits profit target 1, we close out part of our trade. And you could stretch these levels. You could actually, instead of using 50% on the profit targets, you can change those. I'm just going to tell you this. I noticed times where it barely hits profit target 1. Just barely. And again, a lot of it has to do with the move ahead of time during the first 15 minutes or half an hour. Okay. So closing partial, right? You close out part of your trade, couple contracts. You move your stop to what? What did we say? We said when it hits profit target 1, we were going to close out part of our trade and move our stop loss to break even. Break even here is up here at the entry. It's not the top of the box. We didn't enter at the top of the box. Okay? Now, questions are going to rise. Can you take these? But look, it came up and wicked over the high. You can if you want. Okay? A safer bet is to wait for a full candle to close above these wicks, is it not? I'm just saying. You could take that wick above the high. What happens to you after you take that trade right there? If you took the wick when it wicked above the high, you're sitting in the negative. You're panicking right here. You're thinking, I'm going to have a losing day. What about the guy that gets in on this buy signal? It is a green candle. Looks like it took off. You're missing some, right, over the guy that got in here. But this guy that waits right there, he is in the negative very little right here. That little wick. and then it just takes off and hits profit target 1. Nice, easy, not so stressful trade on this one. Not to say they're all going to happen like that. The other guy gets in here on the wick, wicking above. They put a pending order, waiting on a breakout, whatever they do, or just it wicks above and they jump in. You're negative quite a bit, okay, almost to hit your stop. And you're in the negative all these candles. Okay, what is there, about 10 in there, 6? I don't know, 6, 7, about 20 minutes at a minimum that you're sitting there almost wiped out, come back up, you're almost to break even, 0, and then it goes in the negative again. Okay, so that's what we want to look at as we look at the charts. Now, I'm not going to go through in detail like that on all of them. I'll do a few. But this is how, when I analyze something like this, I look at it. Can we make money before noon? Can we be in a profitable position before noon? Okay. Can we close partial, move our stop to a break even, so we have no risk? At that point, we don't care. Do what you want. I've already profited. I'm already in profit on the day. Okay, don't really care what you do at that point. If you take a few losses, don't forget, if you don't have a winning trade in here before noon, the vertical line, we are going to take a trade in the afternoon. Okay, that's the few things we're going to look. So this trade you entered, I also have a 4-hour support and resistance level there. It was right on my chart. I didn't take all those off. Entered, hit profit target 1. We closed out partial, moved stop to break even, got stopped out over here. Great trade, positive day. Next trade, a lot better, right? You look at the whole thing, it's just nailing profit targets, okay? So basically, you shorted on the signal. Again, we waited for a candle to close. Now, again, some of you may say, well, what about that wick? It just wicked through. Look at that. If you're thinking that you want to be a trader that you're just going to put a pending order down there and a wick pops down, it takes you in. Some things you need to look for when we go back through these is if I was wicked in with my pending order, couple things. Am I sitting in the negative for a while? Does it pull back in the negative for a while? Or does it wick down, put you in, stop you out for a losing trade, and then go? Or does it wick down, put you in only to reverse? Those are the 3 things you need to look at if you're thinking, well, I might want to take it when it wicks through. I ran the back test one way and one way only. It takes a lot of time to do this manually, mark up the chart and go back and manually go through replay. And especially if you're not setting profit targets and you're closing partial. Okay. So it just takes some time. So this takes hours to do. And so I wasn't going to run back through and say, well, if it wicked down. Plus on the replay mode, it's kind of hard. You can't put a pending order on there. It would be nice if they did. I've commented on that before, that if that I would like to see them have pending orders in the replay mode. But so far, they just don't have it. So this trade was great. We had a sell signal. Candle closed below the low. We're going to sell. Put our stop halfway. You'll notice that typically it just says stop okay at half zone because that's what I'm using, the half zone. Close partial when it hit take profit 1 here, profit target 1. This one actually hit all the way down to here's where it would have been stopped out. Now, that's if you didn't close at 4. Okay, remember I said if you're prop trading, you got to close in here. This other bar, vertical line, is 4 p.m. Eastern. So you can close at 4 or near 5. That's up to you. I just, as a test for this, to keep everything consistent, for me it was, again, taking trades before noon, between 10 and noon. And if no winning trades, if you had no winning trades, then taking a redemption trade in the afternoon between noon and 4, but ultimately closing out the entire trade at 4 o'clock. Prop trading, okay? Because again, I see a lot of people that want to trade. They want to trade Nasdaq. You don't have the funds to trade Nasdaq. Most people do not have the funds to trade Nasdaq, so why do it? You just don't have the funds. If you don't have the funds, you don't trade Nasdaq. Trade something you can afford to trade. The only way most people can trade Nasdaq is, again, through prop firms, and there's nothing wrong with using a prop firm for this, okay? And again, as we trail, so it hits profit target 1, we close partial, move our stop to break even. Risk-free trade. At that point right there, risk-free trade. Walk away, don't care, whatever. Because you can set alarms on these levels, and when an alarm is triggered, come back and move your stop. Why not? Okay? Hits profit target 2, you move your stop there. Hits the next level, you move your stop there. Hits this next level, you move your stop here, and so on. Every time it either taps a level or closes past it, that is up to you. So here, that's another note to take down, because that is trader specific. It's up to you whether you want to, like over here, well, it doesn't even touch. Like right here. See how it comes down and touches this little line? You probably can't see the line too well. Yeah, you can see it. So it touches the profit target line. If you moved your stop right on that line, you might have got stopped out by that wick right there, which is okay. Because if you look at where it stopped out and ended day at 4, yeah, you would have got some more profit, but that's all right. So again, you have to decide, are you going to move your stop when it touches a profit target or closes on the other side like this, okay, of that profit target? So again, trader specific, make a decision. It's up to you. Here's a buy on break. I wish the green line showed up a little better. I'm going to keep seeing that probably. I can see it. It's right in here. Anytime you're looking at these, the buy and sell lines are basically where my checks are and my X's, okay? So basically, this triggered a buy, of course, before noon. You would have bought, went up a little, came back in the negative a little, not much. Again, some of you are looking at that quarter mark. It's something to pay attention to. This one, if you would have bought and put your stop a quarter of the way instead of half, yeah, it would have worked out. But if you're thinking that, if you're thinking, well, if I take a buy, I want to use the quarter stop area and put my stop a quarter of the way down. Okay? So if you're thinking that, as we look through all these charts again, look at that specifically. I want to see about using the quarter stop as my level. Works out great here. Quarter stop, less risk, right? You're definitely getting 2 to 1. If you put your stop here, quarter stop, you're getting 2 to 1. So entry there, goes up and back for a minute, hits profit target 1. You'd pull your stop to break even. Don't get stopped out here. It hits profit target 2 right here. So you'd move your stop to this level, right? And then you eventually get stopped out here. It never touches profit target 3 up here. So we don't get to move our stop. We're okay with that. Still positive trade. And we're out before 4. Here's the next day. This is what you have to be careful for. This right here is where my little spin on this strategy will help you 100%. Remember how I said sometimes we get a break and it only goes to profit target 1? This is it. This is what wipes people out a lot. They get into a trade. I don't care. Your stop's at half loss. Okay? They get into a trade. Right here, they sell. Sell signal, sell. They want 2 to 1. I don't care what you want. The market doesn't care what you want. Okay? The market's going to give you the move that the market's want to give you. We're not making this up. The market makers are playing. And they're playing with way more money than we can. So, see how it goes to profit target 1, and that's it. It does close past it. Okay? So you would have sold right here. Hit profit target 1, you would have closed partial and move your stop where? Break even, which is at that entry price. It pulls back and stops you out. Isn't that a winning trade? It is a winning trade. Winning trade on this short. Now, again, if you got in here and half loss for those looking at, or quarter loss for those looking, okay, you get in there, you do a quarter loss, you're almost wicked out there. I'd say you probably did not get wicked out. So you too would have been okay with a quarter loss. However, if you got in here on the short and we're looking for 2 to 1, you don't get it. It hits profit target 1. You don't even move your stop and you get stopped out at quarter loss or half loss, wherever. Now, the only way this can be okay shooting for 2 to 1, this is what you have to look and think about as you're looking at this. Sell there, it hits profit target 1, you move your stop to break even on every trade. And you don't close partial. That would be a 0 trade. No loss, no gain. Getting in there, and you want 2 to 1. Let's say you do a half loss. You want 2 to 1. It has to go to profit target 2 to get that. But you say to yourself, when it closes past profit target 1 or touches profit target 1, I'm going to move my stop to break even. I want to be aggressive with my stop. You move your stop to break even. Guess what? No loss, no gain. That is just as good as a profitable trade. Well, not quite just as good, but I'm okay with that. That is way better than taking a loss. So for those that are wanting 2 to 1, that would be the only thing I would do is, again, you're getting in the trade. You want 2 to 1. That's okay. Just when it goes and hits profit target 1, move your stop to break even. Because as we look through the slides, you're going to see time and time again that it hits profit target 1 and pulls back and would hit your stop. So in order to turn that losing trade, this one, because if you got in short and wanted 2 to 1, it doesn't get there. If you were that stubborn, I'm getting in, want 2 to 1, not willing to close partial, whatever, not willing to pull my stop to break even. If it hits 1 to 1, you had a losing trade. So again, as I looked back through this strategy and the moves and it being Nasdaq, I was looking for how can we tweak the strategy, put a spin on it to where we don't have this loss. And that's the way to do it. Those would be the 2 ways. Hits profit target 1, you close partial, move your stop to break even, or hits profit target 1, you move your stop to break even, and you no loss. Okay? Ultimately then, it goes back. Remember what I said in the beginning. We are going to take every trade. Between 10 a.m. and noon, we're going to take all the signals. Now, what this one signals on is it has to pull past the half point. That's just the way it signals. So if this would pull past the half point, like it closed here past the half point, and pulled back down and crossed this low, it would have given another sell. That's how it works, just so you know. So basically, it pulled all the way up. It reversed, right? We turn this into a positive trade or a 0 loss trade. No profit, no loss. One of those. It comes up and gives you a buy. This buy, again, quarter loss, you'd have been okay. Half loss, definitely okay. Hits profit target 1, you close partial. Move your stop to break even. Hits profit target 2, you pull your stop to profit target 1 right here. And then you get stopped out on this. Now, would you have considered this hit? I don't know. I don't know if you can really see, but it's under the line. So it was like a tick below the profit target. So again, it's going to be as you're trading, as you're watching, some of you may see that approach that line and just be aggressive and move your stop up. So if you did, then you'd be stopped out right here and been in for a little more profit. I didn't do that. So as I ran this, I'm putting on a buy order here, or I'm buying right here. So we're buying at market price, and we're putting a sell limit order up here to automatically close part of our trade. And then I would move my stop as a candle closed over the line is how I did it. So again, 2 profitable trades on this as far as I ran it. Again, because I closed partial here when it hit profit target 1 and moved my stop to break even. So as far as I traded it, how I set this up and see it as I would want to trade it, 2 positive trades. Again, if you're wanting 2 to 1 and you don't move your stop at least to break even, you would have had a negative trade, either quarter loss or half loss, and then the positive trade, which would have covered, okay, in this case. So here's a buy on break. Again, buy signal. Buy on the break, sitting in the negative for a little bit. Let's look at the half loss, quarter loss. Again, I'm using the half loss, which is this dashed line, middle of the screen, middle of the zone. I would have been safe. So buying there, pulls back. I've got a half loss on. I'm safe. I'm in the negative a little bit, but I'm safe. For those using a quarter loss, you would have been taken out by this candle. Okay? So you would have bought, came down, quarter loss, you're out. Losing trade. Now, you can always get back in, right? Another candle closes above that high. You can buy in then, quarter loss. You'd been safe on the second trade. But you would have taken the first trade at quarter loss. Okay? So this is what you have to think of. Are you the quarter loss person? Are you the half loss? Again, if you're going to go quarter loss at 6 contracts, you can go half loss at 3 contracts. Okay? Is how you can do that. If you're trying to put on 1 contract and ride it and a small loss, you're going to get taken out more times than not, especially Nasdaq. Okay? Hits profit target 1, you move your stop to break even. Hits profit target 2, closes past profit target 2, move your stop to 1. So on your runner, then you still get that around 1 to 1. Okay? Profitable trade. That's what we're looking at. Here's a sell signal, short it there. Yes, you're in the negative for a while. Quarter loss people, you were taken out. So quarter loss people, you were taken out by this candle. You would have got back in here, okay, on this candle. So you would have taken a loss and jumped back in around the same price. The low of this candle, the close, is about the same price as this one. So you would have, again, re-entered at the same price and had a loss, all right? For those using a half loss, you just sat through a little deep negative, but you're still in it, okay? Hit profit target 1, you'd move your stop to break even. Hits profit target 2, what do? Move our stop to profit target 1 and get stopped out. We're okay with that. So the runner got around 1 to 1. So the whole trade pretty much. The ones we closed out here and then the runner, they all got 1 to 1. Now, why are we doing that? Why don't we just close the whole trade here? Because we don't know if it's going to take off and run one direction or not. Those that I said can look for the breaks again between you have a profitable trade like this, it pulls back and you want another entry. What are you waiting for? You're waiting for it to break back out of the box. So I would use a little spin on that, of course, with a retracement line in this case. Profitable trade, though. That's all we're looking for. If we take a profitable trade in the morning, if we don't get another signal, that's it. We've had one good profitable trade. How many do you need in a month? Well, if I can get one good profitable trade every month, isn't that great? To me, that's great. Okay? So here, short, because it closes past the low. Again, quarter loss, you're taking out on those wicks. Okay? When the price moves up, you're taking out. Half loss, we're safe. Okay? Quarter loss, you're taking that, and then you're probably getting right back in on that other candle because you realized I just had my stop too tight. It goes to what? It hits 1 to 1, we close partial. It hits profit target 2, we move our stop to profit target 1. It did not hit profit target 3 or close past profit target 3. In my scenario here, in my test, I was running it to where a candle had to close past the profit target in order for me to move my stop to the next level. And you'll see cases why, okay? So, because sometimes it just bounces between them, right? So this one did not close past profit target. It didn't even touch it, profit target 3. So my stop was back here. Okay, profitable trade. Another profitable trade, imagine that. Here again, buy signal, and it's on the long green candle. So this one is one you really got to think about. Okay. Big green candle. Are you getting in on the big green candle, or are you waiting on a pullback? Okay. Here's something you got to be aware of, as usual. Is there news coming out? Do we have a news release that's coming out? Okay. Always be aware of news releases, because that's what this is. This is a news release move. Okay. So always be aware. Be aware when Trump speaks. Be aware when Powell speaks, because they will affect the market. Okay. So long green candle. This is a 3-minute time frame. I don't have the image of what it looks like on a 5. Okay. Because on a 5, it may be even longer. It's going to use part of either this candle or this candle down here. Again, I didn't punch it up to see, but it might be longer. So I know that's a huge candle. I still went with the buy. I was still like, nope. I said I was going to buy every signal we had. So even though that was a longer candle, bought, pulled back some. Now, since I bought, obviously, above PT1, I just said I'm going to profit, pull partial at PT2. And that's what I did. Hit here, closed, candle hit, or price closed, or hit, sorry. Close out partial, move stop to this level. And then when it hit up here to profit target 3, move stop up here to profit target 2, came down, stopped out, profitable trade. No more trades after that. No more signals. All right, so this one. 2 trades. We have a losing trade and a profitable trade. Which do you like better? Well, we like the profitable trade better. Look at how far it went. Just look at how far that thing went. Okay? But you don't know which one of these are going to run. We have to look at the first one. We had a buy signal because it broke out the top. This did not get to profit target 1. Okay? Now again, I'm putting my pending order right on that line. That's how I'm using the tool. I made up hard, fast rules. Is we're going to buy when it closes above the high. We're going to close partial when it hits, not closes past, but hits profit target 1. When it hits it, we close partial, move our stop to break even. Okay? The only time we're looking for it to close past is as we're moving our stop to the other levels. We want it to close past that. So this did not hit PT1 for me to close partial. Now, some of you may be like, again, while you're in the heat of the moment, while you're trading, you see green candles, you see this red candle, and you're like, ah, crap, I could have closed. And then this one spikes up, and you go ahead and close partial. Some of you will. You'll hit that button, okay? I didn't. Okay, I made my hard, fast rules. It has to touch that line, basically. That was a losing trade at half loss. We have a sell signal. Get in with the sell signal. We're looking for it to hit PT1 to close partial. We get in the positive for a while. It pulls back. I'm in the negative for a while, almost hitting the half loss, almost stopping us out. But goes back and ultimately touches that line. That closed partial was closed. And if you move your stop to break even, you're stopped out here. So the only way to avoid or capture more of this, again, is to keep your stop back a little bit off the line. It depends. If you're a break-even trader and you pull it to break even, you're stopped out there. All right, so this one, we have a sell signal here. It goes down, does not touch PT1, comes back and hits the loss. Okay, now we said we were going to take every signal. This one doesn't signal again, and I think it's again because the way this one signals is a candle has to close above that halfway point, and then when it comes down and breaks out again of the box, it will give you an arrow. So a candle actually has to close. So if you were on a 5-minute time frame, this may be a candle closing on the other side, which would change things and give you a sell here. So are you taking that sell as a indication to get in? Because again, it's broke past the low. If you did, then you hit take profit 1 and went on to get stopped out here. So that really depends. If not, you have a losing trade here, and that's it. Now, you would want to get in on the redemption period. Remember what I said? If you have a losing trade in the morning between 12 and 4, you get in the redemption period. Well, it's way out of the zone. It's way out of that zone. So you don't have a chance. So that's going to be a losing day unless you take this trade. So again, that's something to think about. You have to run all this through your head and decide, what am I going to do? Write this down and stick to it. Are you taking that as a secondary signal when it breaks out of the box? Okay. Even though there's no arrow, it pulled back to the halfway point. But again, it will draw an arrow only if it closes on the other side of that halfway point. Okay. Trade 1, trade 2. These are both losing trades. And that's where you would have to take one in the afternoon. Trade 1, sell. Goes nowhere. Pulls back to the half point. Okay. Trade 2, it actually signaled. Sell. Does nothing. Goes back. 2 losses. Okay. Now you have a buy. The buy goes up and hits profit target 1. You close partial. Okay. And then it dips back, but you'd close over here at 4 o'clock. Okay. If you can hold runners through, if you're not trading with a prop firm, well, you would keep it. You'd get this. Okay. If you're trading through a prop firm, you're closing out around 4. So that would be a positive trade, which would make up for part of the losers here. Not all of it. This would not have made up for all of it. It would have made up for part of one of the trades. Okay. Actually, it would have made up for all of one of the trades because you're stopping out the runner over here. So you would have had a losing day on this one because, again, the trade between noon and 4, again, the redemption period, that would cover one of your losses. So, great. We had 2 losses. You just got to be willing to take that afternoon trade. This one didn't trend to where it covered both losses, but it covered 1 loss. So we only have 1 loss for the day. All right, sell signal. This one breaks out kind of later in the morning. There's your sell, pulls back some. Let's look at the 2 losses. If you would have been the person that does a quarter loss, you're definitely safe with less risk. You put up less risk. The half loss, you're definitely safe with more risk. Goes to hit. And 2, if you're using a quarter loss, guys, if you're using a quarter loss and then you hit profit target 1, that's actually 2 to 1, right? Because you're using a quarter loss. You're going to get stopped out more often using a quarter loss, but when it hits profit target 1, you're getting 2 to 1. Okay. Close out partial, have a runner on. We pulled to break even, which break even is, again, not at the low. Break even's where you entered, which is there. Move your stop to break even, you get stopped out because it does not close or even touch the profit target 2. All right, next trade, buy. Bought here. I don't care if you're quarter loss, half loss, you're stopped out. Quarter loss, stopped out with less. Then the half loss, same here. Sell. Same thing. So this is a rough day. And this is why I think a lot of people that trade this strategy, they trade it. And of course, if things trend, it's great. We get a lot of choppy days. If days are choppy, they don't know how to make up for that. It's hard to make up for that, especially if you're just putting on a trade looking for 2 to 1 and you don't get it on other days. We've seen a lot of choppy days so far. We've seen a few that trended. So you would sell, get stopped out. You would buy, get stopped out. Again, quarter loss or half loss on these, both of them. And we would have to look to take a trade in the afternoon. Take a trade in the afternoon. Right here, it does go to 1-to-1. And then you close out at 4. So this almost covers one of the losses. Not quite. If we could have closed, and you guys can do a spin on that if you want. Instead of looking for 4, you could close out, if you, whatever contract size you're using, you're going to use the same amount of contracts. So you get in here short with the same amount of contracts, these two, but you close it all at profit target 1. Well, then you're going to cover one of the trades that way. So that would be the only other spin you might do in the afternoon. And that's going to depend on you. That might be something you say, well, I just want to get in. If it's profit target 1, I'm closing it all just to cover one loss. So I got one loss only, right? All right, so we have a buy here. Breaks out before noon. Okay, so we take the buy and it comes back, gives us a half stop. In my case, quarter stop, we would have been stopped out. You would have saved a little bit of your funds. Then we get a sell signal, okay, and take the sell, quarter stop, half stop, both safe. Goes down, hits PT1, close out partial, hits PT2, you move your stop here, hits, doesn't close past, and this is why right here. So look at this one. So it comes down and closes past profit target 2. You move your stop to profit target 1. It comes down and just touches profit target 3. Doesn't close past it. If you take when it touches the line and move your stop, you got stopped out right here. Okay? If you're waiting on it to close past the line, it doesn't do it till here. So when this candle closes past the line, you're moving your stop right here. So you're still in it. So that's very important to notice that. Again, if you took it when it just went down and touched the line, if you said, well, when it touches the next profit target level, I'm moving my stop. Very important to notice that right here. It touched the line, you moved your stop, you got stopped out. You got stopped out here. Again, if you wait for a candle to close, then move your stop, and then it hit 2 more levels, you got stopped out here. That's the difference, or could be the difference. Again, touch the line, move your stop. You got stopped here. If you wait for a candle to close past the line and move your stop, you got stopped out here. 2 more levels of profit. 2 more times your risk that you got on that runner. Very important to notice that right there, okay? And this is why I put this together, just to show you all the ins and outs, okay? Another profitable trade, sell, broke, closed below the stop or below the low, close partial when it touches, because remember, we're going to use a pending order. Okay, we're gonna sell. We're gonna put a pending order to close out part of our trade. Gonna move our stop to break even. Almost stopped out on this, and then it pulls down to a couple profit levels. Stopped out over here. All right, another entry long. It hits profit target here. 1, move your stop to break even, and pulls back, hits profit target 2. 3, you've moved your stop up trailing 1, stopped out over here, done for the day. You're going to see me speed these up a little bit. Enter long here, stopped out at half loss or a quarter, depending on what you're doing. Took a sell here. The sell hits profit target 1 and then does not hit profit target 2, so we get stopped out at break even. So 1 profit, 1 losing trade. All right, so this one runs for us. We're grateful. We get a buy here. And we buy, put a pending order up here to close partial. It dips back a little bit. Notice, clean slate in here between high and low. So quarter loss, half loss, both safe. It goes up and touches. You've moved to break even. You don't get stopped out. It goes on up several levels. 4 o'clock we close. So we've closed at 1, 2, 3 to 1 on the runner. Okay. That's why we leave runners on, is in case they run, we get extra profit. That's our bonus for the day. All right, so this one, 2 trades. Remember what we said, we're going to take every signal between 10 and noon, no matter if they're losses or not. This is where a lot of you will get gun shy, or a lot of traders do, so I do recommend testing this. You could back test it, replay mode, or you could start trading it tomorrow and trade it in a paper account, a demo account. Because when you go live, when you start trading it live, you're going to second guess this. Any strategy, you second guess. You take a loss. When everybody takes a loss, they're a little skittish about jumping back in. You cannot be. You have to make your rules and you stick to your rules. You have to become mechanical in order to trade for a living. You have to. You have to hide your emotions, learn how to shove your emotions down, hold them back. You have to become mechanical. Because here's what you have to do. We bought here with our stop at the halfway point, or I did. Comes back and stops me out. I have to buy back in when it signals here. Have to. Because those are my rules. I can't sit there and say, well, I'm just going to wait. You can't. The buy signal comes up, you have to buy. You can't sit there and say, I'm just going to wait. I'm going to wait a little bit. Because then what happens? Well, then you buy over here. You're buying at a worse price. Okay, I'd rather buy back here at this point than buy up here. Okay? So, because what you're doing is it signals, you buy. And then you're like, you're waiting. You're going, no, I'm going to wait. It pulls back, and then you buy over here. And you're like, oh, glad I bought here. Why? You bought it at a worse price. And you're saying, well, because it pulled back. If I would have bought here, it just pulled back. I'd have been negative for what? True. But it pulls back all the time. Look at this. Pop up, pull back. Pop up, pull back. Pop up, pull back. Pop up, pull back. You're still sitting in the negative. You get in here. You're more in the negative. You're just not sitting in there as long as I am. So we buy when it signals a buy. Half stop, I'm still in. Quarter stop, you're out. So if you do a quarter stop, you're out and you're looking for that redemption period trade. Okay, you're looking for a signal, which you would take it over here when it breaks again. You would have to. You have to. Okay? So we're trading typically 1 to 2 times in the morning between 10 and noon. And it doesn't always break and run. Sometimes we get this. So we sit through, we take a few losses. But in this case, I took a loss. The second one I'm still in because I use a half loss. And then it goes, hits PT1, close partial, stop to break even, hits PT2 and 3. Again, trailing the stop up. So when it hit profit target 2, it didn't close past it. Either you moved your stop or you're waiting on a candle close. So it touched the line. If you moved your stop, you're stopped out here. If you say I'll wait for a candle to close past the line, well, then your stop would have been back here at break even. So I'm kind of running the scenario through both. I know how I ran it in the replay, and I waited for a candle to close past the line. Okay? So here's the next one. Had a sell signal when it crossed below the low. Candle closed. Quarter loss, half loss, you would have both still been in. Hit PT1, and you would have closed partial, moved stop to break even. Hit profit target 2, you would have moved your stop to profit target 1 and got stopped out here. Okay? So overall, a good trade. Here, we have a buy signal. It closes above the high. And if you had a quarter loss or half, you're still in. Both of you are. And basically, again, hits PT1. I don't know why the X is up here, but hits PT1, you close partial, move stop to break even, do not get stopped out. Hits PT2, closes past PT2, you'd move your stop to PT1, and then not stopped out in here. It moves up to PT4 or 3. 1, 2. There's 1 in there. Where's 3? 3's in the middle here somewhere, right under that line. So it hits 3, and you'd move stop up. 4 o'clock is where you're closing. Okay, so one of those candles in there, you're going to close the trade. So here's one, gave a buy, stopped out at the half point. Gave another buy, almost hit, PT1 but did not. Okay. So I didn't get to move my stop to break even. Sat in the negative. Quarter loss, you're stopped out here. Quarter loss, you're stopped out here. And a quarter loss, you might have bought one of these and like this and got stopped out again. Okay. So that's again why I was using the half loss, because as I noticed stuff like that, if I bought here and had a quarter loss, I got stopped out here. I would buy on this candle, quarter loss, been okay, does not hit 1-to-1, and comes back and hits my quarter loss. I'm out. Then you buy this candle with the quarter loss, you're out. Another trade. You buy this with a quarter loss, and you're in and you're out over here. So more losing trades in that case. So again, bought here, stopped out because it wicked down, hit there. Bought here, not signal, because remember it takes a candle to close past light. So I went ahead and bought again. Didn't hit. Half loss, got stopped out here. And when it closed, again, redemption period. I took 2 losses in here. Losing trade, closed here. I'm looking for that redemption trade. Buy in here, quarter loss, half loss, both made it on this one. Hit PT1, move your stop to break even, come up and did not even touch PT2. Close the trade at 4. So that winning trade covered one of the losses on this one, or close to being covered. So less of a losing day. Okay, we lost less by doing that redemption trade. Buy signal, bought on close. Guys, this as I do this and look back over these, I put these together yesterday and ran them through replay today. As I look at these, this is why the close partial is important. 100%. Look at this chart. It's chop. I mean, you're talking about Nasdaq. It does this a lot. It does this, moves choppy, way more than it breaks and runs. Way more. I don't have the odds on, or the stats on how many times Nasdaq breaks and runs for the day. Or how many times is it choppy like this? Just back and forth. Okay? Because if you look at this, it broke out the top, came back in the box, broke out top a few times, came back down, and went way down below it. I mean, you're talking about the start of the market. The start of the U.S. session, back and forth, and then it broke out the top. Short-lived. Came back down. Sideways, and broke down through the bottom. So, choppy. Nasty. Nasdaq's the widowmaker, I've always called it. So, that being said, let's not look for trending days on this all the time. Look for range-bound choppy days all the time. If we happen to get a trending day, great. We're in to catch the ride. We have runners on. We have a runner on to catch it if it keeps trending and running, okay? But if it's going to be choppy for the day, let's trade it for what it is. Let's trade the chop. If you choose to trade Nasdaq, this is what you're going to do, okay? And a lot of people trade it. Break out the top, hits profit target 1, close partial, move stop, break even. Does not hit profit target 2. Does hit a 4-hour zone, resistance level, and then stops you out, okay? Did we know it was going to hit that 4-hour support resistance level? Anyone? I always have them on my chart. Saturday and Sunday are reserved for looking out the 4-hour time frame and marking support and resistance levels and zones. So stopped out at break even, positive trade. Positive trade on all this. Okay, choppy day. Here's some results. Again, how did the strategy work overall? I ran this through replay. So I put this together yesterday. Of course, it's 2 in the morning as I'm recording this. So put it together on Saturday, and then here Sunday evening, ran it through replay. There's my results. Okay? And I'm going to go over how I traded it. $13,718. That is between March 27th and May 5th. Okay? Now, I had some people say, well, yeah, it was a good month. That didn't look very good to me. There was a lot of choppy days, right, where it barely got to PT1. The win rate, almost 78%. The best trade was 28,333 or something like that. I think my biggest loser was like 1,300 or 1,500, something like that. Okay. So because of your spread, how far apart the box is, and that's going to change that. So that's the performance report. Now, when I did the replay, I did it exactly as I would trade it. When a candle closed above the box, I bought. It had to close, and I would buy. When it hit, just touched PT1, I would close partial, move my stop to break even. And then as it climbed, I would move my stop to one level back and reverse that for a short. Okay. So great, I think great trading results. Now, you look at the 13,000 and you're saying, man, how many contracts did he use on that? That's the dog back there choking. How many contracts did he use to get $13,000 in just over a month? I used 3. I tried to keep it realistic, and this was on micro. I used 3 contracts on Nasdaq. Okay. I used the box for my stop. I'm used to risking 500 easily for a trade. Okay, 500 to 1,000 for a trade is easy for me. And it's going to be hard for some of you guys to do that. So you're going to want to go. Now, I used 3 contracts. As it hit PT1, I would close 2. I would hold 1 runner. Some of you guys can't do that. Some of you guys are going to be lucky if you can do 2 contracts and close 1 at PT1. It's going to leave you off balance. That's why I used 3 contracts. 3 contracts, close 2 at PT1, move your stop to break even, trail that last runner. Okay, you'll be fine. I'm not paying attention to how much I'm risking. Okay, with my stop, I'm not using a hard fast. I only want to lose $100. I only want to lose $200. I used to do that when I first started. I quit doing that a long time ago. You risk what the market tells you to risk. Okay? Where's your stop have to be? If you're using this strategy, your stop is the middle of the high and low. That's it. That's the way the strategy is formulated. If you start messing around and going with the quarter loss, you're going to take more losing trades, and you're going to take more trades, period. Here, the way I traded it, I took 1 or 2 in the morning and maybe 1 in the afternoon if I had to. Okay? Typically on the days, it was 1. And that's it. 1 and done. You profited because you close out 2 and leave 1 on, and it gets stopped out at break even or at 4 o'clock. Okay? Your runners outweigh your losers. Typically, those runners that we leave on, in case it runs, they outweigh the losers. They help cover that. Okay? So those are the stats. Here's what the chart looks like. There's the total profit locked in. All right, so let's look at this one. Long position, short position shows you the balance on that. Net profit on long positions was 10,000. Net profit on short positions was 3,600. So we did profit more on the long positions. Look at the contracts. Max contracts held 3. That's it. That's all I did was 3. I do that purposely. Now you could double this and go 6 and close out 4. Okay. And you'll see that in the end. Here's total trades, 63 trades in all. Again, we took more longs and shorts, 35 over 28. Okay. Losing trades. Okay, here's winning trades. So 49 of our 63 were winners. 28 were longs, 21 shorts. Close to 50-50 there, not quite. And then our losing trades, 14, 7 longs, 7 shorts. So that's even. All right, percent profitable. Again, we're around that 78% level, which is awesome. Okay, and 80% for the longs, 75% for the shorts. I'm not going to go through and look at all these numbers. Largest winning trade was $2,838. That was a long position. Okay. And then the largest short position was 822. The largest, we're not going to look at percent. Largest losing trade, 1,182. I told you it was around 1,300 to 15. I couldn't remember. So largest losing trade, about 1,200. That was a long position, or no, that was a short position. And then we did have a largest long trade of a 1080. Okay, so there's the stats on it. Love those. Great stats on this. There's the risk performance ratio. Our profit factor, we're at a 2.72 overall, because short we're at a 2.0, and then profit factor on longs 3.2. Here is where the magic lies. How many contracts can you trade? Again, I did this with 3 contracts. Closing 2 at partial, at profit target 1, and leaving 1 runner on, and then managing that stop. That made $1,718. Again, March 27th to May 2nd. Okay, this past Friday. Now, I just ran some numbers. Just multiply that times 2, 3, 4. Okay, that's for those of you that can. Now, again, you're probably not going to do this in a personal account. Slap on 6, 9, or 12 contracts. But you can do it in a prop firm account. I'm going to, I'll cover that in a minute. So 3 contracts, closing 2, 1 runner, 13,000. Multiply it times 2. Let's double it. 6 contracts. We're going to close 4. We're doubling everything. We're closing 4, but now we have 2 runners on. Okay, what does that do? Doubles our pay. Doubles our payout. Doubles our profit. Okay, same trades. We're not doing anything different except increasing contract size. Multiply this one times 3. You got 9, 6, and 3 runners for 41K. And then multiply times 4. I know when you look at these numbers, you're like, holy cow. 12 contracts, closing 8, leaving 4. That's important. If you adjust these right here, I did this trading 3 contracts, closing 2, 1 runner. If you mess with, if I went back and ran the same data and did 6, but closed 5 and left 1 runner on, this number would be different. I don't know what it would be. Might be better than this, might be worse than this. I'm not going to go back and run those because I had good results just running this alone. All right. So that's the end of the strategy. Now, I'm hoping you guys get this and watch it tonight, first thing in the morning. So tomorrow morning, we'll do a live stream, and I will be trading in a demo account, paper account. So I set one up specifically just for this strategy. This week, all week long during the U.S. session at 10 o'clock or just before 10 o'clock a.m. Eastern, I'll be starting the YouTube live, and I'm just going to trade this strategy. That's it. I'm going to run it from like 9:30 or 9:45. I'll start and run it from 9:30 to 9:45 until noon. That's it. I'm going to run to noon. If I have no winning trades in the morning before noon, in the afternoon, I'll look for another entry, but I'll do that off camera, okay? Still keep it real, still keep what we're doing, but I'm not going to film 5, 6, 7, 8 hours, okay? Long. So that'll be the plan for the week. We're going to demo it this week. Every morning live, that's how we're going to trade. I'm only trading Nasdaq. That's all I'll have on my chart. Not interested in anything else. We're going to trade this. We're going to see how it works. I'm going to do the 3 contracts, closing 2. So you'll see me place the trade and then put a sell limit. If I buy, put a sell limit on. If I sell, put a buy limit on. At profit target 1 to close out 2, and then manage the stop. So that's how we'll do this week. And then what I'm probably going to do is go ahead and buy another prop challenge account and run it through a prop challenge, and we'll see how it does. All right. So I hope you enjoy the video. Look for the live to start up. It'll prompt in the Discord when it opens up. All right. So enjoy your evening. I hope you enjoyed the video. Talk to you later.